And we've got the Retail Investor Roundtable with us now. Julie Warner is here from Better Investing. Tom Witkowski from Cambridge University, both of them returning to the program. And for the first time, app developer Justin Esgar joins us here at Post 9 as well. It's great to have you guys with us.
Thanks for having me.
Thanks for having us.
Thomas, let's kick it off with you. What are you buying?
I've made a couple of small purchases. I recently bought Pepsi. I thought the DuPont reaction to the board vote was ridiculous, overblown, so I got in there. But the market hasn't done much. I don't think the market's too expensive. I don't think it's really cheap, so it's sort of picking and choosing at this point.
You know, all three of you told us what you're buying, what you're holding. All three of you own the same stock.
Apple.
You own Apple, you own Apple, you own Apple. You own an Apple Watch.
Yeah.
Why do you own Apple right now? I mean, it's been hot, but you think that more to come?
Absolutely. I mean, they have amazing products that are coming out. The Worldwide Developer Conference is in 2 weeks. We don't know what's going to come out, but we have some good ideas, and they're just on a hot streak, and I feel like they're just not going anywhere.
Justin, you're an app developer, though, right? So
yeah.
This is kind of part of your market research. Why are you convinced that Apple's also a good investment?
Sure. So they've had stability, you know, with all of their products, and until we see something that really throws for a left, there's really no reason to get rid of them. It was great that they did that 7-1 split like a couple months back, and that really helped a lot of investors be able to buy more in. And they just keep chugging away with new and great products. I mean, the watch sold, what, like 1 million units, like day one?
How do you find yours?
I love it. I love knowing that if someone's going to tweet at me, I can just go like this, but it's kind of awkward when you're in like a public place talking into your watch.
For now, anyway.
Julie, it's not just about Apple for you. You've got Tiffany, you've got Gentex, Genesee in Wyoming, and Polaris. Tell us about a favorite here. You like that one mining company. I mean, the miners have been killed this year.
Yeah, it's actually Genesee in Wyoming isn't a mining company. It's a short line railroad.
Oh, okay.
And so I purchased that back in December for the first time. It's a long-term play. I tend to invest for the long term, and I believe that there's growth there. It will ebb and flow like the market does. My favorite company is Tiffany, and I've owned it since actually the first time I bought it was during the financial crisis. So I like to buy good, solid, great companies, and I like to get them at very good prices.
And you've had a nice week this week on the back of that Tiffany investment. Sure. What's interesting to me about the three of you is that you're all talking about individual names, contrary to some of the Twitter and general public reaction that focuses mostly on index funds.
Right.
Julie, why is individual stock picking the way to go?
I think for the individual investor that wants to take the time to learn how to do it, and as you know, my organization thinks that investment clubs are a great way for the average person to learn. That's how I learned back in 1984 when I joined my first club. But it gives you control, and you get to, an educated investor will learn how to value a company, how to pick good, solid, quality growth companies, how to get a diversified portfolio. So you are the owner of these companies. You take control. You don't have to take profits like the mutual funds if you invest that way. And I've been very successful. I know a lot of people have been very successful doing it. But the secret is education. You've got to get the education, and you have to learn to take the emotion out of the decision making.
That's a point.
Good for you, and good luck with that, as a matter of fact. Tough to do. Tom, JP Morgan, is that your only financial you like here? A lot of guys are telling us to like financials here.
I love Synchrony Financial, the GE spinoff. I think it's got underplayed. It's not really talked about. I think they'll institute a dividend at some point.
In fact, you sold Citigroup to buy that one, right?
I lowered Citigroup. I didn't like what was going on there. The Banamex, too many negative stories. I thought it was near the top end of the range. But Synchrony, I've been in since they split off, because you actually didn't get shares, even if you own GE. You had to go out and buy them. So I started out at 23, 24. But you know, it's going to make $3 a share, I think, next year. And a $1 dividend, I think, is certainly possible. Put a 12.5 ratio on it, 37.5. So that's one of my favorites.
Justin, just again curious about the backdrop here. Are you mostly in just stocks, or do you have a lot of fixed income investments as well?
We have a couple of fixed income investments, and I obviously own my house, which is a great thing, and building up our equity. I mean, at my age, really, it's about a quality group of products to keep myself going. I'm a pretty young guy, at least I think so, and I want to be able to go for the long haul. It's not about the day-to-day.
I think everybody at this table is safe in buying green bananas. We're okay with that. Anybody care when the Fed raises rates?
No, I want them to raise rates.
Yeah, you do.
The market will overreact, and it will sell off for no reason, and I'll be in there buying.
And then Julie can buy some more, right?
Yeah, I absolutely want them to raise. I think 0% this long, I think, is just dangerous, and I think they should raise it.
You agree?
I do agree, but it's do what they want. All I know is for a long-term investor, the market always ebbs and flows, and when it gives buying opportunities, I'm more than happy to take those. When it overshoots, I'm more than happy to take a little bit of profit, especially for my Tiffany, and go shopping in a different place.
Well, it's great to see all of you. Thank you so much for joining us. We love having people like you come on the show to tell us what you're doing with your portfolios right now. Appreciate it very much.
And 20 minutes to go in the session.